All right. The way that the Masterclass works is one-time $25 fee. The Masterclass is actually over, but everyone that signed up for that gets one education night weekly. I try to wait for the biggest day, and so we can go back and go over it and reflect. And this is a lot different than most education. It's more so me making each of you think. I'm going to ask questions like, how would you have approached this? And for the people that aren't actually in the Discord, save the questions for the people that actually went through the class. Those are the ones that I'm kind of working with, but I want everyone to see how this works and kind of what we do daily. But what I was saying earlier, I started the small account August the 15th with $2,500. Yesterday was actually the first day I went kind of heavy, because Howie in the Discord is averaging 10K a day, making like, I think yesterday he made like $30,000. Had a six-figure day, $60,000, $70,000 days, and so on. So kind of lit a fire in me. So I had to get a 10K day yesterday. But that $2,500 account is now at $51,400. Starting November. I don't really want to pay much taxes because I haven't traded this year. So I probably will dumb that account down a lot and start trading live again. And I will start recording. Each session we'll do daily recaps and so on. So everyone can watch me trade live, even if you're a premium member and you can't hop in on it and watch it. That there will be recordings, and those will be posted to YouTube, not in the Discord. I will drop the link to the YouTube in the Discord, so everybody can go back and reflect on those. Today was a really good day. Of course, this morning when we were live, I made $6,400 on a single move, and I'll explain that move really quick for everyone. We all know I use the 9 EMA and the 20 EMA. These other two indicators are just there, and I need to take those off, honestly. But my initial trade this morning, it was right here. This is where we initially talked this morning. I had key levels mapped out here, and what we were waiting on, what I tell everyone every morning is, when the EMAs are jumbled like this, we do not want to place a trade. Why? Because it's going to chop around. We need separation from that 9 EMA and the candles to identify the trend as it's starting. And what did we get all through here? Chop, chop, chop. And then finally we separated right here. So what we did is we waited for that micro pullback. We got the micro pullback into the 9 EMA. I know a lot of people entered here and scaled here. We had the key levels mapped out before everything happened. My initial trade was not right here. I was just teaching. We had to pull back into the 9 EMA again, rejection at that key level on that double top. And as this was happening, I said, we have not got a 20 EMA touch. Usually there is 120 EMA touch and it continues upwards. So I'll put in, I think like 10K right here on a trade. I had 3,725 calls. Not that many calls. I'm saying that was my strike price. But that was a strike price on the calls that I had. And I ended up selling them. I didn't want to be greedy. I had $6,400. No reason to sell. I didn't feel like watching it. I was trying to teach and motivate everyone. So I went ahead and closed that trade up in this area here. And I made $6,400. But as the trade kept going, I kept walking everyone through it. We got the 20 EMA bounce, ran up, came back to the 9 EMA, it jumped again. And as I said, while we were live, you can start to see when a stock starts getting exhausted whenever the breakouts get weaker. We had a solid breakout here, got weak, consolidated for a while, micro pulled back into the 20 EMA. We broke out, one red candle there. We started to form a round top back into the 9 and came up, and right around this area, I said, the breakouts are going to start getting weaker, and it's going to form a round top. That's how we know, when a reversal is coming. So initially by utilizing the strategy that I teach, this would have been our entry. This would have been our scale point. Would have had another scale point up here. And then our final close would have been under the 9 EMA right here on this one. Then if we zoom out, I didn't look at the chart again the rest of the day. I made my money and I got off of here. Right here, we had a key level. We could have shorted it here into that 50 EMA, whatever, however you wanted to do it. But we also had a inverse cup and handle, which was just, this is not completely accurate, but right here. But what we see here is the key level that we had mapped out already was the handle low for the inverse right here. So the same entry point on the inverse cup and handle when it broke the handle low right here, as it would have been if you just looked at that key level. So there's double confirmation there. We could have went short. Obviously wouldn't have made much out of that one, but utilizing it the correct way. And I actually did this earlier. I think I was showing Kenny. We have our key levels mapped out. So we would have scaled our position here. And then when it reversed back over, we would have closed our final position there. And I didn't look at the chart again the rest of the day after that. But I'll go ahead and let anyone ask questions about any of this, and I'll go into, asking people what they saw after all of this happened. But that's how the trade morning went when we were live. And now I'll start going into the asking everyone else questions. But if anybody has questions about anything I just said, go ahead and ask. Mullet, it's fun. I know, and I'm not bashing anyone that doesn't trade live and share their screen. It actually helps me to do it because it's making me think about it. I'm talking the trade out to myself. I do understand I'm the only one that does this, but it's not walking on eggshells for me. I have nothing to be nervous about. I'm confident in my technical analysis. I'm confident in the way I trade, and I do think I am the best day trader in America. And anyone that's watched me trade would agree. And I'm not saying that to be arrogant. I want everyone to be better than I am. But I like trading live with my screen because it makes me think, is this the right thing to do? Is this the wrong thing to do? So walking on eggshells to me is saving my portfolio. I'm not going to make a stupid decision while people are watching. If I was doing this by myself, I probably would be stupid. Confession time, HJ. He said, I didn't trade with my chart, banked on the live streaming chart while on a call. I love to hear it. Anything specific to help you spot the round top, to not get caught up in those similar ones? You can't just look at this right here and say, okay, round top. You have to utilize the EMAs as well. Right here, we almost touched that 20 there. And while I was live, I said 220 EMA touches. The second one usually fades. Right here, we had 120 EMA touch. And then up here, we almost touched it, but we did not. Second EMA touch, we faded. We have to wait for those confirmations. We can't just say round top, that's short. You have to have other indicators that come along with it. And, the 20 EMA is that indicator. And this right here was actually triple confirmation. It wasn't just a round top. We had the key level initially, drug it out. It broke the key level. It also broke the handle low of the inverse cup and handle. And at the same time, it was breaking the 20 EMA. That's triple confirmation. So that was an A+ setup there. Obviously, we would not have gotten much out of this one, but that was an A+ setup. There are 3 different things confirming that this is going down on that one. If you were to catch the downtrend or the downward move, when would you have taken profit? On this one right here, I would have scaled my first position at a key level. And this is the importance of buying multiple contracts. I understand if you have a small account, you can't. So if you have a small account and you're trying to grow it, take profits at the first key level. You don't want to buy 2 contracts and then scale here, scale one, and then sell the other one here. By that time, you may even lose money depending on how long it takes, especially if you're doing 0 DTE. If you have 2 contracts, just sell it, compound that. It may take you a month to build that up to where you can buy 5 contracts, but it's worth it. Slow and steady wins the race. EMAs were a bit jumbled on the last potential entry. Does it make a difference? No. If you're talking about up here, the EMAs were not jumbled. This is actually a 9 EMA crossover, which confirms that it's bearish. These sellers are in control right here. Down here, this is the only place that and I'll draw a box. This is the only place that the EMAs were jumbled. This area right here. We broke upwards, micro pullback. This is when I started looking for an entry. And a lot of people entered right here because I alerted this. Then we had an initial key level from pre-market that we had already mapped out. So this is a scale point. But this right here, this is a no trade zone. You're going to chop through that. I watched the 1 minute chart for the first hour of market open. The reason being is the most volatile time of the market is market open. So I'm going to utilize that 1 minute chart because it's going to give me an earlier entry. After about 9:30 my time, which is an hour after the market opens, I'm going to switch to that 5 minute chart. Did you look at the green volume that came in or just right? That's the thing about the strategy that I've created. When it plays out like this and we have a momentum day and a directional day, the only thing that you have to look at is the EMAs here and the key levels that are right in front of your face. I start looking at volume. Yes, if I was watching QQQ or whatever, I would have been just looking at the volume there. But after this point here in this breakout, I would have solely just relied on the EMAs. I start looking at volume spikes in reversals because, for instance, if we're going up and the volume is dying, there's a good chance that we're going to reverse. And when we're going up, the volume's dying, and then we have a spike in red volume, there's going to be a reversal. Same thing if we're going down and the volume's dying on the red side, and we get a green volume spike, probably going to get a reversal. You gave a really good explanation yesterday about how you the move. It was listening properly as I was watching the trade. I remember that. Could you repeat that? Fireblade, can you go into further detail on that? I'm not sure what you're talking about. Maddie, I've honestly never even looked at a futures chart. But my final exit on this full trade to the upside would have been right here, because that is the first opening under it on the 1 minute chart. I'm sure on the 5 minute chart it would have been completely different. When you trade, you're always trading same day expiration. It depends. If we're on a highly volatile momentum day, that is with a directional move, I'm going to trade 0 DTE on those. But if we're chopping around, no, I'm not going to trade 0 DTE because it may take a very long time for the chart to go in the direction that you're anticipating, and the decay is going to kill you. And you know, even if you're right, you're still going to lose money. Somebody said, how do you identify your key levels? All of this is in the crash course and the masterclass. So I'm going to strictly pertain to all of this. And I do this every day live. I'm literally talking the trade out and I'm telling you what I think is going to happen before it happens. But I wanted everyone that's on Twitter that's been asking me, I wanted everyone to essentially see what it is that I do daily. You see this in live real time. Like people were watching this, before any of these candles formed. They were watching this, and I was telling them what I thought was about to happen. And I do this every day. No, there's no on Weeble. There's no volume bars on SPX. No, I do not. When I traded small caps, I did use level two. The level twos for entries. And it's completely different with options. I keep it very simple with options. I'm not reading those level twos. Well, with small caps, you have to. Even with any option that I trade, I'm not looking at the level two. I'm solely going off of key levels and the indicators that I've came up with using my strategy, and it works. Tomorrow I'm going to make the live session free for everyone, so everyone can actually see what it is that I do in real time. All right, we're gonna go ahead and move over a little more on the chart. And I'll futures, I will explain this to you really quick before we move on. With small caps, whenever I traded small caps, I would use the level two going into key levels, simply because, just say the key level right here is $3,707. And just say we're going up into that. You can have a false breakout on the chart because this chart is going to read what people are selling it for. So we'll have a false breakout there. But if you read the level twos of small caps, you're going to see that people actually are not paying over that key level. And that's what leads to those false breakouts. So essentially, you would need someone to pay $3,707.01 for it to break a key level. No matter what the chart says, with small caps, if you're a momentum trader and you're scalping, you have to read those level twos, because that's going to keep you out of those false breakouts. You're going to see people are actually paying over the key level for that stock that they're trading. Yeah, on TradingView you have volume and view up and all that on SPX. All right, so this is the live session through here. So I'm going to mark all of this off, and then we're going to go from there. We were done trading after this. Everyone banked through here that was on live with us. We see the EMAs jumble up again. Anytime there is a reversal, you're going to see the EMAs jumble up. What happens when the candles come into the EMAs, they're going to have a hard time separating from them. Just like at open over here, they were having a really hard time separating from those EMAs. But when it did, we caught the directional move upwards and we made money. Same thing here. It had a hard time separating really from those EMAs all through here. And then what do we see? We see it break down here, bounce off the 100, come back up, fall through the 100, come back up. They're still jumbled. And then what happens? I'm going to show everyone this here. This right here is the key area. What happens? All of the EMAs are lined up perfectly in order. We have the 9, the 20, the 50, the 100. Do you see what happened over here? They're all scattered. But when they were all in order, we got a directional move. 9, 20, 50, 100, and the stock moved up. The EMA started separating. And then what happens? All the way over here, they jumble again. And the chart scattered again, just like it was at open. But what happens? They all do what they're supposed to do, and they separate the opposite way that they did on the way up. 9, 20, 50, 100. This is when we're looking for a trade. All right, we have a key level here. And these key levels aren't accurate. This is, well, actually, this is pretty fucking accurate, but we're going to start looking at trades right here. I'm going to say, if I'm live, I'm going to be like, watch this double bottom. Any alert that I throw out can be played either way. And everyone that has been in the Discord knows how to play every alert in either direction. We're anticipating the directional move, no matter which way it goes. Right here, if I wish I had the volume pulled up on this, but there was a volume spike right here. I can go ahead and tell you. So we would have went short here, but if we didn't go short here, we have our first 9 EMA pullback. So we can move the key level down to here on that 9 EMA pullback. We let it do its thing. We enter short here, write it down, comes back. The 20 EMA becomes our stop loss. Why does the 28 EMA become our stop loss? Because it's below our entry point. We can't lose money on it. So we let it ride down, 9 EMA pullback. We probably scale a little bit right here, and then we let the rest ride. If we open up above the 20, or this key level here, we would have closed our position. We did not. We kept going down all day long, kept going down, 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 down. And what you see over here is we would still probably be holding some of this position. Why would we be holding it? Because we entered the trade way up here. We got the 50 EMA to rely on now. We'd still be holding this position all the way down. And in all honesty, everybody would have closed their trade on the way down, but you know, just looking at everything, we wouldn't have closed our position until this area over here, or this area right here. But that would have been a very, very huge move on the way down, utilizing the EMAs only. That's all we would have been utilizing there. We got a key level for an entry, and we'd have rode it all the way down. Now we'll go into, you know, anyone that did place a trade today, you know, ask me questions. If you messed up, whatever, we'll start going into that. But what I'm going to do here, I'm going to delete everything. And what I want to do is I want to ask everyone, based off of this, there are actually 2 indicators here. Based off of this area here, I want to know what everyone sees. This area right here. What do we see on that? And yes, we actually got a massive volume spike. I see that now. Thank you for posting that. All right. Everyone's tennis girl said chop. The correct answers, everybody's actually getting this. Golden Dig. Stealth. What we see here is we have 3 indicators here. There's 3, and you know, once you've been doing this long enough, you can analyze all of that, you know, instantly. We have a potential inverse head and shoulder right here. It did play out. We also have an inverse cup and handle. Let me delete this really quick so I can show everyone. We have an inverse cup and handle. And we also have a double bottom. The inverse head and shoulder, key level for that is going to be right here. Here's our first shoulder. Here's our head, and then here's our second shoulder. So there are 3 confirmations that this chart right here is completely bearish. if we were solely watching, a double bottom right here or the inverse head and shoulder, we would have got an early entry. Right about this time is when all the EMAs lined up. We could have, entered a trade here, scaled at the key level down here, and then rode that 9 EMA down. So this is where the trade would have actually started, had I been live and if we were watching it. But you have I said double bottom up here. I meant the double bottom was right here. But the inverse head and shoulder, this is where the trade would have started. Why? Because we have an inverse cup and handle. We also have an inverse head and shoulder. And then we have the cup and handle, inverse cup and handle. Handle low is right here. It lines up with the shoulder of the inverse head and shoulder. Here's the first shoulder. Here's the second. Here's the handle low. Here's a level it needs to break. It does all of that at one time. There are multiple indicators here. Comes down to this, it could bounce here on this double bottom. So we would scale our position at that point. Once it breaks through, we let it ride. 20 EMA becomes our stop loss right here. Now we're really far down, so we can afford to gamble. Of course, we're scaling our position, each time we think it could reverse. So we'd have been scaling our position right here. We would have held some, let it keep going, and we would have stayed in that. Kept getting stopped out all day. Gary, let me see. Gary, you're in the masterclass, and I'm not sure what you were doing. I wasn't live, but today was one of those obvious days if you stick to the strategy. I know we absolutely killed it this morning. And then, right here, I didn't look at the chart again, but right here, I think what you may be doing is maybe your stop losses may be too tight. I don't know where you're setting your stop losses, but be sure you're setting them at relevant key levels. You want to give yourself a little bit of leeway. I say this over and over and over. The only time you should be wrong on a trade, you should ever be red on a trade is right when you enter. Your technical analysis is probably right, but your entry timing was wrong. So you say you kept getting stopped out. Were you re-entering those same trades? Because if you weren't re-entering those same trades, I guarantee you were like, well, fuck, if I would have re-entered that, I would have made money today. Sometimes everybody on FinTwit freaks out and they think that I'm lying because they don't want to come to the fucking Discord and watch me do this live. They think I'm lying because I don't have red days. I have red trades every day, but I re-enter the initial trade that I lost on. Like I said yesterday, I lost $200 on the initial trade. I stopped out of it and I re-entered and made 19,000. You have to be sure you're re-entering. If you're not re-entering on these trades, you're not doing yourself justice when it comes to trading. That's when you start making money. You're going to be wrong on entries a lot of times, but if your technical analysis is decent, you're going to get it right. So it may take 2 or 3 times re-entering. Don't full port. That would be my advice: is don't full port. If you have a $500 account, you don't want to go put $500 into a play and hope it goes right. You want to save enough money to make at least 3 trades. You may lose $20 each time, and then the second time, make 80. You lost 40 and then made 80, so you're plus 40 on the day. But yeah, make sure, for instance, right here, if I would have entered this trade, EMAs, everything aside, just looking at the candlesticks, I would have entered this trade. My stop loss would have been right here. If I was looking at the inverse cup and handle, my stop loss would have been in this area. Don't know what just happened. That right here, if I would have entered here, my stop loss would have been up here. And you have leeway to move around because you have a zone here. You see it's chopping in this zone. So I know if it breaks above this level, it could run. So that's where my stop loss would have been on this trade. And if I would have entered this trade right here, my stop loss would have been right here. Why? Because that's a key level to the downside. And I know if we bounce off of this key level and come back up and break this, we could run. So know where your stop losses are going to be before you enter. And, worst case scenario, you stop out here or you stop out here. If it comes back and breaks back down the same level that you initially tried, re-enter it. Um, Jenkins says, I'm 100% winner so far on puts, but sucking at call entries for now. I feel I'm too slow. You have to be able to react, especially at market open, the way we trade with momentum. You have to be able to react quickly, and you have to have your key levels set from pre-market, because the thing about puts is, just solely going off of this area, we would not have had to zoom out to get our key levels and our scale points. Why? Because it came up. We know where they're going to hesitate throughout the downtrend. When they're coming up, we're going to have to zoom out really far because, we may be breaking highs that haven't been hit in a long time. So calls are actually harder for me than puts because we have to zoom out further to find those key levels. But on the put side, after momentum day like we had today, puts are easy. We know where it's going. What percent of your portfolio would you suggest risk in the first year of trading? It's not the first year, first month, first day. It's whatever you're comfortable with. Everybody here knows that when I trade with a pessimistic outlook. And that's completely different than what most traders do on FinTwit or anybody that you follow. And when I say I trade with a pessimistic outlook, it simply means if I see a cup and handle, I know that it could still go either way. Cup and handles are bullish. It usually breaks out. But I know what could go wrong. I know that it could fake break over the handle high and it could reverse and go into a downtrend and completely tank. So I enter trades based on what I know could happen to me negatively. And I'm only trading with what I'm willing to lose. After I enter a trade, it takes a minute for it to get to the point where I'm comfortable. My stop losses are tight and I'm ready to exit that trade until it gets to the point where it sets up perfectly where I can let the shares or the contracts ride that I've entered. Every trade, every pattern, everything, there's two directions it can move. There are two people in the stock market. One of them's always going to be wrong. There are buyers and there are sellers. People that are buying thinks it's going to go up. People that are selling thinks it's going to go down. People that are buying calls thinks it's going to go up. People that are buying puts thinks it's going to go down. So essentially, one person's going to be right. One person's going to be wrong. If you play it right, you're going to be the ones that wins. But you have to have that pessimistic outlook and know that you could be wrong and not be overconfident. Stop losses, they're hard to teach, and it all comes down to everyone's risk. I do not set hard stops. Why? Because when I first started trading, I was losing and losing and losing because I wasn't setting hard stops. Figured out what I was doing, and I learned if I do actually stop out of these trades, I can re-enter them and I can actually make money. So I respect my mental stop losses. But it all depends. For instance, say I was in calls right here and, we spiked up here and then we came down. My entry point, if I see a volume spike on the way down where my stop loss should be, I'm going to close that trade because it's probably going to reverse on me. I'm going to exit early. My wins are always going to outweigh my losses because I'm anticipating what's about to happen. You got to be able to read that volume. You got to be able to be ready to sell. And if you're not, you can get screwed over. But for new traders, I would recommend a hard stop. And if there's a key level, or if there's a number, for instance, say you put $100 into a trade and you're okay with losing 25. So your contract is $1. So you're going to pay $100. Set your stop loss at 74. You lose $26. And that's just how I'd play it. And as the stock keeps moving in your direction, steadily move that stop loss up so you make money. If you enter the contract at $1 and it goes to $2 and your stop loss is still at 75, well, you're dumb and you shouldn't be trading. And that's just the way it is. You know, you should constantly be moving that stop loss up. But today, and like I said, these weekly education nights, they're not so much education. I've taught everyone in here in the crash course and in the masterclass everything that I know. So these weekly classes, we're going to be going over the day, you know, everything that happened. We're going to analyze that and so on. It's not so much about teaching anymore. It's more on the side of how are you implementing what I have taught you. How do you navigate volume with simple volume bars that don't differentiate between buy and sell volume? Here's the thing. Let me go to QQQ and I'll show you. Like looking through here, this SPX and QQQ are literally the same. And I went over all that earlier. All right, here's our double bottom, whatever. And I said on SPX earlier, I said, I guarantee you there was a volume spike here. Look at this. Look down here. What do we see? We see a big red candle, small red volume bar, but there's a volume spike. Then we see a tiny red candle right here. But look at the fucking volume on this. That tells me that we are about to fucking tank. So I'm going to load right here on VWAP. My stop loss is going to be tight up here at this key level. It never broke that key level. We could have rode this down all day long. But I'm not necessarily looking at the volume bars. I don't give a shit what they look like. I'm looking up here at the top of the screen and I'm looking at the numbers of the volume coming in on it. So right here, we had 59,000 in red volume. Then the next candle over, we had 186,000 in red volume. Next candle over, we had 460,000 in red volume. This is going down. That's what I'm looking at. I'm looking at the number up here. And like I said, we're going to continue to do these weekly. Tomorrow is Friday, so I'm expecting a good day out of everyone. Close the week strong. What I recommend is listen to me early, and we'll be done. I know for the past 3 weeks, we've been done within 40 minutes every single day. And I know people stay on and continue to trade and so on, but that's not what I do. I take my profits and I roll them into the next day. So tomorrow, let's have a 10-minute day, 20-minute day, 30-minute day, something. But let's get on, get off, make our money, and leave, and enjoy the weekend. I noticed that huge volume candle was such a small price. So it's a clear indication of something. How long did it take you to become successful, Philip? I'll let everyone continue to ask questions. Like I said, tomorrow, the live trading will be free for everyone. And I will also record that session. So anyone that is not a premium member, I highly recommend you hopping on tomorrow and you will see what you're missing out on. There's no comparison. I'm straightforward. And if you want to leave the Discord, I don't give a shit. If you want to stay in the Discord, I don't give a shit. I've got my team here. We're going to be here. We're going to continue to make money. You can stay or you can watch from the outside and watch us all bank. It's completely up to you. You know, like I said, I'm happy with where we are, and you know, we're going to continue to grow as a team. But I do want everyone to see what you're missing out on. You know, not talking about the Discord you're currently in or whatever, but you will see how different it is here. And that's a promise. And in the morning, I'll post it in the announcements channel just like I did today. I'll probably drop it 2 or 3 minutes before the market opens, and then we'll go from there. But if anyone else has any questions based on today, not questions, that are irrelevant, but anything that I covered, feel free to ask it really quickly. I'm about to get off of here, but I appreciate everyone hopping on. And tomorrow, let's close the week out strong. You may not be a millionaire today. You may not be a millionaire in a year, but if you stick to this shit and you learn what it is that we're doing here, I can promise you your time is coming. That your time is coming. Jim, it absolutely is. And you're on the path for it, I promise. And that's the thing. 5% a day on $1,000 account, you'll have over $2 million in 252 trading days. People don't realize that. They want home run hits every day, and that's not realistic. Yes, I made $25,000 in the last 2 days on a very small trading account, but guess what? They were not big. They were literally not big trades. They were trades that I was confident in, and I simply used this strategy that is so simple, from $2,500 to $51,000. And the thing is everyone in here can do that. And it's from compounding. When we first started doing this, I was making $20, $40 a day. Now I'm making 10,000, 6,000. It's stupid. It takes you time to get to that point, but with consistency and being okay with taking a little profits, you will get there. I'll post this this weekend, and I'll make the announcement for the premium option. Steve-O, options are definitely the way. Every $100,000 day that I ever had, I put $250,000 into a trade when I was trading small caps. I made 10,000. No, actually, I made $19,000 yesterday on a $10,000 investment. You can't do that with small caps unless you catch a trade early that moves huge. You cannot do that. And this is something, that's why I stopped doing small caps. My strategy was so effective with small caps. Options are kindergarten work to me, because small caps are so hard and I mastered them. Options are literally kindergarten work for me. This is so simple. It blows my mind that not everyone is able to make money like this. And I understand it takes time and mastering it and finding your niche in the market. But this shit is so simple. It's crazy to know that on a weekly basis, I make more than any doctor in my hometown in Mississippi. That's fucking insane to me. I did bust my ass to be where I'm at. It's just, it's humbling, and I want everyone to be able to do it. But it's crazy stuff. And I say this all the time because it's so humbling every time I think about it. Fucking 2 years ago, my checking account was negative. Negative. Last year, after taxes, I cleared 1.8 million fucking dollars doing this. That is stupid. And the thing is I'm not smart. I'm not a smart person. I had a goal, I stuck to it, and I learned this shit. I put in the work to learn it, and we all can do it. And I'm here to help along the way. So let's make it happen. I'll see everybody in the morning. I appreciate everyone hopping on. I'm not a smart man, but I know what love is. It's crazy. And that's the thing about success. And, you know, everybody's heard me say this. It's when you're at rock bottom, you keep digging yourself deeper and deeper and deeper. And when you're about to give up, if you decide not to give up, you succeed. And it's almost like it happens overnight. And everybody that's watching from the outside thinks that you got lucky. And you know, they can't understand because they did not believe in you and they're not willing to put in the work because they're okay with mediocrity and getting by. We grew up in a society that it is normal to get married to your high school sweetheart, have a white picket fence, go to college, be in debt for 20 years, paying off your student debt, and barely get by. Those people look forward to that 1 week a year that they get vacation. That's their yearly goal, is that 1 week they get off to have vacation. My mindset has always been, fuck what everyone else is doing. I want my life to be a vacation. If I wake up in the morning and I want to go to Vegas, or if I want to go to California, or if I want to go to Florida, guess what? I can do that. Why? Because I don't want to be like everyone else. And I don't give a shit what anyone else is doing. I busted my ass for this, and now I'm reaping the benefits. So bust your ass now, and I promise you one day you're going to wake up and you're going to look back and it's all going to be worth it. If you have been trading and you haven't had one of those days where you think to yourself, you cannot do this, it's not worth it, you're not working hard enough. Every successful trader goes through that. Every successful trader. But I can promise you, when you're about to give up, if you stick to it, that's when you succeed. So I'll see everyone in the morning, and let's go get this bag.